It's Shauna, the tax goddess, and I am excited, not excited. Let's go with not excited to bring you the news. More details, of course, from the IRS with their new big, fat, healthy budget that they've received over the past few months. They have now released a list of who they are expecting to audit this upcoming year. So as usual, I wanted to give you guys the heads up as soon as I know, you know. So I wanted to make sure that you know what to be doing, what not to be doing, and especially here before December 31st. Today is November 29th, which means that you still have a month to work on these. Make sure everything is organized, make sure everything is 100% ready for tax filing season next year in April, March or April. Now, the list. So I'm going to read off the list, and then we're going to go over each of the different categories. Okay, so people who have received 1099 income that do not report the income. Schedule C sole proprietorships in general, which is a very big, broad term, but we're going to come to that. Multiple years of losses in a Schedule C. Okay, we'll definitely talk about that one. $100,000 plus of income from a Schedule C. So inside a Schedule C. Guys, there are some easy fixes to this, so don't panic if you fit into one of these categories, okay? Day trading losses, it's a big one with everything that's just been happening in the markets, okay? Failing to report crypto transactions. We've seen this for the past couple of years. This one's no big surprise. And the last one, cash businesses with transactions that were reported by banks and others, okay? So let's start at the top. We're going to work our way through here. Okay, so the very first one, people who receive 1099s and do not report the income. Okay, don't become Al Capone. Okay, this is literally what he did. He received income and did not report it. Okay, one of the easiest ways to get caught by the IRS in an audit or just in general, even caught by their computer systems, is to be receiving some sort of income but not reporting it. Now, if you guys have listened to our channel for any length of time, you know I'm a huge fan. Report everything, everything. If you made $1, report that dollar on your tax return, okay? Because when you report the dollar, now you can also take expenses against the dollar, okay? So please, please, please report every dollar of income that you make, whether it's 1099 or cash or tips, of course, W-2s, anything like that. Make sure you're reporting it in full on your tax return, and then look for tax strategies to reduce the amount of tax on the income you earned. Book a call with our team if you need tax strategies, okay? But please do not report income items that you've earned. It's rather important that you report everything, okay? And I'm saying Al Capone because that's exactly how he got caught. He did not report his income. They couldn't catch him on actual illegal charges, so they caught him on tax fraud, okay, tax evasion. So let's move to number 2. Now, number 2, 3, and 4 are all related to Schedule Cs. Now, can you tell that the IRS is going after Schedule Cs? Absolutely, okay. So the question here is, how do we get around these things, and what is the best way to deal with them? So the first one that they listed was a Schedule C sole proprietorship in general. Okay, that's millions of businesses across the US. So if you're really, really, really worried about getting audited only because you're a Schedule C, I mean, it is on their hit list here, okay, what can you do? You can form an LLC. You can then change that LLC to be taxed as an S Corp, or if you have 2 people, taxed as a partnership, taxed as a C Corp, okay? Just because you have a business does not mean you have to stay a Schedule C. Now, the goods and the bads here, right? Schedule Cs are cheap, they're easy. You just hang out your shingle and you start your business. Switching to an LLC or an Inc. or a partnership or an S Corp or one of these other forms do often have costs associated. So you might have a separate tax return, you might need payroll, there are other costs. But if you guys know I was talking about that aggression scale. If you personally are on 0 to 10, 0 meaning the IRS never calls me, never ever, and 10 meaning we're all going to jail, if you're closer to that 0, 2, 3, 4, and you're currently a Schedule C, you might want to go and change. You might choose, yes, I understand it's going to cost me more, but I really want to stay away from as many audits as possible. And considering the IRS is specifically listing this as something that's going to happen, they will be auditing the targets that they're seeking. Okay, Schedule C sole proprietorships, you may choose to change purely because of the potential audit. Okay. Now, the third one, multiple years of losses in a Schedule C. This has been a rule with the IRS, and I'm going to call it a rule of thumb, okay? This has been a rule of thumb with the IRS for years, 15, 20 years. If you have 3 years of losses in a row, okay, the IRS will come in and talk to you. Because why? Why have you started a business that you're continually having losses at, right? Who in their right mind would stay in a business where they're just pumping money into this business and not getting any benefit, not earning any income coming out of it, okay? So what the IRS is trying to do here is they're trying to find businesses that are considered straw man businesses, right? So you've set up a business, but it's not really a business. You're not really trying to run it for profit, okay? Now, I love the way they phrase this because the IRS is always very, very, very specific, okay? The way they phrased it was multiple years of losses in a Schedule C, okay? Firstly, it does not mean that you can't have multiple years of losses, okay? You can. Just be prepared that if you get a call, be prepared to talk about why is the business a loss? Why are you okay having 3, 4, 5 years of losses? Option number 2, don't make it a Schedule C. Make it a partnership or an S Corp or a C Corp, something like that, okay? So again, if you're worried, if we're on that aggression scale, 0 to 10, and you're closer to the 0 where you really don't want that audit, if you've got multiple years of losses in a Schedule C, I would highly recommend that you talk to your CPA, talk to your tax strategist, okay, and think about what other ways can you do this. Third option is maybe you make sure you have a profit in year 3, multiple years of losses, okay? So lots of different ways to get around this particular piece. Now, the next one, $100,000 plus of income. This one kind of bothers me. So let me run through an example here. $100,000 worth of income in a Schedule C. Now, income, the way they've written it, income is gross income before any kinds of expenses. So you can have a Schedule C that has $100,000 worth of income, but maybe you have $90,000 worth of expenses or $110,000 worth of expenses, and now you're at a loss or very, very, very small profit. So typically in the CPA world, if your profit is not more than $50,000, we generally leave you as a Schedule C because switching, for example, the 50,000 mark is kind of the switch point to an S corporation. If we switch you to an S corporation, well, now you have a separate tax return, you have to file payroll, there's all these other things that you have to do. So for a truly small business, making $100,000 a year and only taking home $10, $15, $20,000 worth of profit, we used to keep you Schedule C, okay? This audit rule, now if you're on that aggression scale, if you're at the 0 to 2 to 3 and you really don't want that telephone call, we may switch you to an S Corp or a partnership or a C Corp, even if your profits are tiny, tiny, purely because your gross income is over $100,000, okay? So big hits here from the IRS, specifically on Schedule C. Now, there are 3 other points that the IRS listed on their bullet point list here of people that they're planning on auditing, at least discussing, okay, targeting for audit. The next one is day trading losses. Now, this is something that we saw very, very frequently over the past, I'd say 6 to 8 months, okay? People that have lost their job, they've quit their job, they're gonna go be a day trader. Day trading can mean crypto, it can mean stocks, it can mean options, bonds, whatever it is that you're doing. But day trading is fast trading, in and out, in and out, in and out all day, okay? So depending on, did you make money, did you lose money? Day trading losses means that you're trying to offset, generally, you're trying to offset other income with losses that you've made using day trading, okay? Now, day traders have very specific rules, okay? And if you don't meet those rules, you are not a day trader, which means that you cannot deduct those losses, okay? So if you have heard the term, if you are even thinking about removing and reducing your taxes using this day trading type activity, right? Go into the general assumption, like 98% of cases, you will be considered an investor and not a day trader, okay? With a day trader specifically, like I said, there are some very, very specific rules. I'm gonna pull up the actual definition for you here, guys. A day trader, so this is the actual definition. Day trader is a type of trader who executes a relatively large volume of short and long trades to capitalize intraday market action. So within the trading day, in and out, in and out, in and out. The goal is to profit, i.e. IRS wants to see a profit. The goal is to profit from short-term price movements, okay? Now, one of the big problems here is that people, maybe they're doing this as a side hobby, right? Like, hey, I still have my job. I'm working on it. I'm doing this day trading thing to make some money. Totally got it, right? But if you're doing this as a side job, if this is not your primary job, if this is not what you do full time, the likelihood that you're going to be able to actually deduct those day trading losses above the $3,000 max cap is really, really low. So if you're CPA or, you're talking to your buddy, your neighbor or whatever, and they're like, oh, just take it as day trading losses, make sure that you're working with your CPA, working with your tax strategist, okay, to make sure that you meet those qualifications. I have seen more and more and more people get bit by this because I got bad advice. Okay, so day trading is a very specific, very harsh qualification to actually meet with the IRS, okay? Now, the next one, and this one I'm going to say should be a little obvious, okay? So failing to report crypto transactions. Now, over the past 2 years, there has been a special box on the face of the 1040, on the very first page of the 1040, which is the individual tax filing form. That box specifically says, did you have any interest, exchange, anything else in virtual currency? Now, the first question that came out on the very first form was a little vague. The next year's question was a little more specific. This upcoming year's question, 2022, is going to be even more specific. What they're looking for is people that have cold wallets. If you have a cold wallet, you're supposed to be reporting it, okay? Now, cold wallets, of course, your Coinbase, all of your current normal trading, a lot of people had big losses this year with some of the exchanges going dead, right? If you did anything at all, if you even bought $1 worth of crypto, okay, you need to check yes on that box. Now, this is the killer bit. I have already seen a couple of audits on this where somebody reported the income or losses from the crypto, but on Schedule D or wherever it is, depending on their situation within the tax return. However, the CPA failed to check the box saying, yes, I have crypto. There are penalties for that, okay? And good luck on getting your CPA to pay those penalties, even if the CPA messed up. This is a really big contention right now with everything that's going on. So please, 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 when you are signing your tax return, it's actually your responsibility to make sure that the entire return is correct. And I know that sounds ridiculous. You pay a professional, you pay a CPA to make sure that it's correct, okay? But yeah, no. Your job, and the IRS won't go after the CPA. The IRS will talk to you for penalties for not checking the box, for penalties for not reporting the crypto, okay? So crypto is a big thing that they're going after. Now, the very last one on the IRS's bulleted target list here is cash businesses with transactions that were reported by banks and others. Now, what do they mean by others? So they're really talking about any kind of PayPal, Venmo, any of the Cash App type programs. Okay, so cash businesses with transactions that were reported by banks. Pretty much every business has at least some transaction that was reported by a bank. Was it on a credit card? Was it on your debit card? Like, where was it? Okay. So really what they're trying to find here is pure cash businesses that are not reporting their income of any kind. But I go back to our very first bullet point today, which is just report all your income. There are so many strategies that you can use to reduce your tax burden. As you guys know, that's exactly what we do, Tax Goddess. We specialize in tax strategy for business owners, okay? So 2 things added today. If you're worried about any of the items on this list, so people who receive 1099s and don't report them, Schedule C sole proprietorships in general, multiple years of losses in a Schedule C, $100,000 plus of income in a Schedule C, day trading losses, failing to report crypto transactions, and of course, cash businesses with transactions that were reported by banks or others. If you are worried about any of those categories, we would love to walk you through what we think you should do about it, okay? As I said, Tax Goddess specializes in tax strategy for business owners. So if you're interested, if you need help, if you have any questions on today's list, reach out to our team. You can find us at taxgoddess.com. So that's the news for today, guys. I hope you guys have a wonderful day. And I guess we'll talk to you later. So good luck. And if you're going to make any changes, this auditing is going to start next year. So make sure you make these changes before December 31st. Okay. Today, as of filming, it is November 29th. Make sure you make these changes before December 31st to make sure that you are not putting yourself in that audit spotlight. Okay. So everyone have a great day and we'll talk to you later. Okay. Bye.